In this video, we're going to go over how one of our members made over $3,000 on Shopify, and the main goal is to really help you understand how I do this analysis and how you can execute on these trade plans. So first, to cover shop here on the left, looking at the 3-month, 1-day time frame, there's been a lot of bounces in this $30 range. There's been a lot of demand down here, and this was the area of demand that I had listed in our Discord and that I posted in our watch list. So it is simply the opening price and low of this candle right here. We can see from this point there was a large move to the upside, and this tells me that there's some unfilled orders down here, and we want to see price bounce when we get back into this area. So this is the 3-month, 1-day chart highlighting the area of demand, and then going over to our Discord, I have a direct screenshot here from our watch list. I was saying that prices bounce off this range 4 to 5 times, and if the general market can find some footing, I like equity or further out options for either a day trade or a swing. Daily demand plus the RSI divergence, if we can hold this area, stops can be anything below 31.44 or the bottom of the range. So this is what I was seeing on Shop. I really wanted to pay attention and keep a close eye on that demand zone. And then this was the result. So price came back down into our area of demand. We held the bottom range, as you can see right here. And one of our members swung calls and made over $3,000. Now, it's not really about the $3,000 and him making out like a bandit on this swing. It's more so understanding how you could have taken this and what I was seeing when I was doing my analysis. So you saw how I got the daily demand zone on the left, and then now looking at the right, we can see price came down into the zone, and that first touch provided a little relief bounce, and then we can see the second touch here as well. And the third time we touch it, obviously the general market's been a little bit weak, so the demand zones have been weaker. And we cut right through it, but we hold the bottom of the range. So this is what you want to see. Even if you get in here, you want to see that 30.55, 30.53 area hold. That is simply the bottom range, and your stops are anything below this area. So if you're getting long here and you're down a little bit, you can add into your position at the bottom of the range, and then your stop would just be the bottom. So that's what some of our members did. They added right at the bottom of the range here and swung calls and swung equity going into the next session. Now on this day, which is Wednesday, August 31st, I was looking for the 31.81 to hold out of the open, and let's go down to 1 minute so we can see it with a little more accuracy. So I was telling our members that I wanted to see 31.81 hold as we were making a move higher pre-market, and we were right around this area, right around open. So we open above, we come back down, we use that area of support, and then we make about a 5 to 6% move on equity. So the options moved extremely well in this move, and this was a great play to take advantage of because Shop is a cheaper name and the option premiums move very well. So we saw how we got the demand zone on the 3-month, 1-day time frame, and then you could see on the 1 minute how price reacted once we got the open above the top of the range, and then we used it as support. So there's a lot of things to look at here. We can see how price reacted on the first couple touches, and then once we finally broke below the zone, how we held that bottom range. So you can see how accurate this is and how this play worked out. Obviously, like I said, the general market's been weak, so this pop didn't really last too long, but still on a $30 stock, a $2 to $3 move is about 5 to 6%. So overall, a great play on Shop, and hopefully you understand exactly what I saw. Now let's take a look at Apple here, and before we go over the 15-minute chart with the day trading levels from today's watch list, I think it's important that I cover the weekly perspective and show you exactly what I was seeing. So we can see from 179.61 to 172.17, we have this very valid area supply, and I say that because from this candle right here, the high and opening price range, we make about a 25% decline to the downside with very minimal bounces in between. So from this huge drop, this shows me that we have unfilled orders within this range, and we can see once price gets back into it, we reject, right? We're down about 10% from the highs, and the highs were right there inside of that supply. Now, what's really important to understand, since this is a weekly supply zone, you want to be buying about 2 to 3 months out on your contracts, and you want to give the play some flexibility in case we chop within this range. So if you buy about 2 to 3 months out, you're protecting yourself against chop. But luckily in this case, once we got right into that zone, we had a wick above into 176, but we got no weekly close above that 172.17. So this was a great opportunity to get short with time, and this is exactly what I was seeing on the weekly perspective. Now going over to the 15-minute chart, these were the day trading levels that we had in today's watch list. So now to really minimize it and go over the day trading perspective. So we can see we have this area supply at 162.58 to 161.70. After this area consolidation, this was the last candle before the drop down, establishing that zone. So that's how I got this area supply. And then our pivot from today's watch list was 160.28. And that is simply right in this area right here. We can see on Monday, Apple made a move to the downside, had a bit of consolidation before making a nice rally going into the afternoon and end of day. So this establishes a little area demand. It's not a super valid one since it didn't provide a huge bounce, but it's still an area of interest going into the following couple sessions. So we can see that following day on Tuesday, we make a sharp move to the downside, establishing this area supply. And once we get back down into that range, we lose it, we get those 15-minute closes below, and when price comes back into it, we want to see it used as resistance. If we go to smaller time frames like a 1 minute or 3 minute, we can see there was some temporary relief within this range, but looking at the 15-minute candles, we get some nice closes below, and now once price gets back into this range, we want to be looking to short. So that's how I got my 160.28. If price were to open above and use it as support, the first target would be supply. And if we were to fail and not get any 15-minute closes above the pivot, price was going to make its way back down into the overnight lows and back down into the gap fill. So we can see that's exactly what happened. Price opened and made its way right into that area of resistance or that pivot. And you can see we failed to get a single 15-minute close above that pivot area or above that area of resistance. And what happens? We make our way into the overnight lows, we get temporary relief, and then we end up filling the daily gap fill end of day. So this was a great play going short on Apple. You could have taken scalps on that first touch of that first 15-minute candle range. Usually the premium is moving the fastest in the morning, usually that first 30 minutes. So you could have taken this as a scalp or you could have taken it as a longer day trade. Either way, this was a great play going short on Apple, and hopefully you guys understand my analysis on the weekly and how I got the levels for the watch list today. And with that said, that's going to be it. If you guys learned something, please leave a like on this video and subscribe to our channel if you're new. I greatly appreciate you listening. And with that said, I will see you in the next video.